story this evening. The government has now explicitly defined what constitutes an e-commerce company, and it's also explicitly now given its blessings to the marketplace model where 100% FDI has been allowed through the automatic route. The Department of Industrial Policy and Promotion has put out a press note today defining e-commerce companies. In that, they say e-commerce means the buying and selling of goods and services, including digital products over digital and electronic network. The government has relaxed rules on foreign direct investment, or at least clarified them further or explicitly. 100% FDI will be allowed for the marketplace model. This essentially means that companies which act as a facilitator between the buyer and the seller and do not actually own any goods or inventory can now get 100% FDI via the automatic route. However, FDI will not be allowed in companies that follow the inventory-based model. Basically, if the company actually owns the goods and services that it sells to its customers. However, FDI is also allowed in the B2C e-commerce model, but with riders. The company must sell its products made in India through the e-retail platform. A single brand entity trading through brick and mortar stores can also undertake retailing through e-commerce. So in a sense, it's aligning the e-commerce regulations with the single brand regulations. Nasscom and the Internet and Mobile Association of India have welcomed the guidelines, but traders in the brick and mortar business are calling this a U-turn by the government and have threatened to protest. So is it indeed a watershed moment for e-commerce companies operating in India? And does this help clear the air once and for all? Joining us now to understand this is one of the most successful e-tailers in India, the co-founder and CEO of Snapdeal, Kunal Bahl. Also with us, Vaibhav Kakkar of Luthra and Luthra, joining us now to take us through the legal implications of the notification put out by the DIPP. And Sharad Sharma, the CEO and co-founder of BrandSigma, joins us on the phone line from Bengaluru. Gentlemen, appreciate you joining us here on the show. Kunal, let me start by asking you, is this now an all clear as far as the FDI regulation is concerned? Because on the face of it, it seems like a reiteration, albeit an explicit reiteration of the policy, a blessing specifically for the marketplace model. Does this clarify the ambiguities as far as the FDI regulations go?
Absolutely, Shireen. I think this is a great move by the government. It reduces or removes, I should say, all the existing ambiguities that have always created some degree of uncertainty amongst investors looking to invest in the e-commerce space. So a great move by the government to push and encourage a very transformative industry for India.
Yeah, but Kunal, this also then strengthens the likes of Amazon, because 100% FDI allowed through the automatic route into marketplaces. We've all known how Amazon in the US to the SEC has sort of always mentioned as part of its risk the regulatory environment in India. But with this explicit clarity, as you point out, does this now pave the way for big ticket money coming into the likes of Amazon and its commitment to India? And what that would then mean for companies like yourself?
I think more capital is welcome. Right now, we are not fighting only for the consumers who are already buyers, which is probably less than 100 million number. What we are trying to do is create the market to bring 1 billion people online in India and at least 500 million people transacting online in India. So the question is, how do we grow the size of the pie? And I think today's move will really help in achieving that goal.
Okay, I'll come back to you, Kunal, in just a second. But Vaibhav, would you agree with Kunal that this does clear the air? Because on the face of it, it does seem like a reiteration of the existing policy, or in that sense, a reiteration of what we already knew was happening. But in that sense, if I can use the word, is now explicitly been legitimized.
Absolutely. I think this is an extremely positive move. In the last few years, if you see the amount of FDI the e-commerce sector has received, it was quite a strange anomaly to be in, where the Union of India last year had submitted an affidavit to the High Court which said that the FDI policy does not provide for anything insofar as marketplaces is concerned, and had directed, the High Court had directed the regulators to look into the matter. So it was one area of FDI policy where clarity was much required, and I think they've clarified some of the obvious points. They've also brought in some conditionalities as hygiene factors to ensure that what is actually a marketplace is a genuine marketplace. those may actually turn out to be points which may merit some further evaluation.
Yeah.
But I think overall, I think it's a great move. It removes ambiguities and brings more policy clarity.
Okay, it brings more policy clarity. I want to get you on those conditions that have been imposed now and whether you believe that these conditions are in fact restrictive. Kunal, I'll get you to comment on that. And one of the conditions that I believe may be a worrying one as far as the do's and don'ts is concerned, where the policy says that not more than 25% of the sales will be affected on the marketplace through one vendor or their group companies. The marketplace will not directly or indirectly influence the sale price of goods and services. But is this 25% clarification that has come as way of this guideline, is this going to be a restrictive one to deal with? Vaibhav, I'll start with you.
So I think, there has obviously been a lot of representations made. This entire policy enumerates and factors in number of concerns that other stakeholders had been raising. As we speak, there is a case pending in the Delhi High Court, which is scheduled for hearing on 4th of May in the Retailers Association, where the High Court had directed for formulation of policy. One of the grounds was that there is regulatory arbitrage and brick and mortar are being restricted from raising FDI and much more onerous conditions are being put on them, whereas e-commerce players are freely raising capital. I think in that backdrop, they have put in a condition which eventually means that it has to be a genuine marketplace. And therefore, concentrated sellers with, significant power within the ecosystem is going to be a challenge in times to come. This may merit some of the larger e-commerce players to look at, streamlining their operations to bring in more sellers on board. But as I understand, as the market is developing, most marketplace companies are moving towards creating a much more genuine marketplace model. I would also like to make one more point. I think they've also clarified on one point, which is that the marketplace company can provide support on warehousing, collection of money, and other such support services related to e-commerce. And that is a very positive step, because if you would recall, some of the representations in the High Court what the retailers associations have made is that this set of additional activities makes it as disguised retail, which the government has thankfully clarified, and ideally it shouldn't be. That these are all support services and a marketplace company should be able to do it and be able to raise 100% FDI.
You're absolutely right. In fact, the guideline does say that the marketplace may provide support services to sellers in respect of warehousing, logistics, order fulfillment, call center, payment collection, and other services. But Kunal, on this 25% condition, how restrictive is it going to be? As Vaibhav was pointing out, will it mean any sort of restructuring for companies like yourself?
Definitely not for us. I've always been a firm believer that we have to offer an open marketplace and enable democratization of selling online, and not have single large sellers who contribute to a large percentage of the sales on a marketplace. I've been a very, very, very strong proponent of having a very equitably distributed marketplace. So at least for Snapdeal, we are very excited that the government recognizes that and recognizes the fact that it's our responsibility as platforms to not concentrate the sales in any one entity.
Okay, Sharad Sharma, let me bring you in on this conversation. When we were chatting about the Startup India mission, one of the representations that you had made to the government was also to ensure that regulation would provide Indian companies to stay on in India. So it has to be Startup India and stay in India. Do you believe that post this explicit clarification or reiteration, call it what you like, the government has been able to do that specifically for e-commerce companies?
It does provide a clarification. It's a level playing field. The clarification or the guidelines itself are short. There are no caveats in them, 3 pages and all. So I think I welcome all of that brings clarity. But also let's keep in mind, the pure marketplace model that you have, which is, in the US, the eBay model, roughly about $85 billion flows through that. eBay makes $9 billion of revenue, almost $4 billion of profit. But on the other hand, the downside of that is they grow only 5% a year. What grows in the US at 50-60% is Amazon, and they are not really a pure eBay-like marketplace. And that is what is the tilt that is taking place. And in that model, there is no profits. Amazon's profits overall as a company are less than the profits that they make from the AWS, their cloud services arm. Similarly, Alibaba makes all its profits from, financial services and marketing services rather than from its e-commerce business. So I think there is a question mark on how much, what's going to happen here. I frankly, I'm in a camp where I don't have clarity on that. I know it's it's a business that's, which has attracted a lot of capital, and that capital seems to be receding. And, there are gray clouds. On that front, but having said that, I'm happy that the government is not complicating that situation further, and at least is clarifying what kind of guidelines.
I'll get Kunal to respond to the questions that you've posed as far as the future of this model itself is concerned. But Vaibhav, let me ask you, this business of not allowing FDI as far as the inventory model is concerned, do you believe that this is already anticipated and we've already seen companies sort of restructure keeping that in mind? So is this likely to cause disruption, or do you believe it's already been addressed? Vaibhav?
Sorry, I didn't
lost that
realize
line
that's a
with
question to me. I think
go ahead.
last few years, in the last few years, significant amount of FDI when it came in this sector. Most entrepreneurs as well as investors will sort of, they understood that there are challenges around the inventory-based model. Let's look at the genesis of where the challenge is. The challenge is that when the FDI policy for multi-brand retail was notified, in order to be able to come up with a policy that addresses everyone's concerns, they had come up with this whole policy stipulation that the relevant state government needs to actually be okay with allowing multi-brand retail in their state. Now, when it came to the issue of e-commerce, the government said that they're unsure of how do they go about implementing similar policy stipulation insofar as the e-commerce space is concerned. If an order has been placed from Delhi, whereas it's being delivered from Gurgaon, and Delhi is FDI is banned, and in Haryana it's permitted. So with different states, there was that challenge. But to answer your question, Shireen, a lot of clients in the last few years had actually been conscious that the inventory-based model has huge question marks. So they have all sort of borne in mind, and most of the ecosystems that have been developed around number of businesses factor that in, and a number of those players are actually in marketplace model itself. I think the real concern or the challenge was that some of those marketplaces could be alleged to not be following the hygiene level, whereby they could be called as real marketplaces in every sense of the term. And some of those hygiene issues were seriously a cause for concern. And I think that's where I think the policies try to keep that balance between the two.
Okay, so Kunal, what does this now mean as far as fundraising is concerned? Are we likely to see you move in as far as another round is concerned?
I was waiting for that question. I wondered why it took so long. We are doing just fine on the capital front right now. We have our heads down executing, building the right high quality business. I just want to respond to Sharad's point and bring some entrepreneurial optimism here. The most profitable e-commerce companies in the world are all marketplaces. And when it comes to growth rates and sizes, some of the largest e-commerce companies in the world are also marketplaces. The fastest growing e-commerce companies in the world are also marketplaces. In India as well as in China, Alibaba being a strong case in point. So I'm absolutely confident marketplace is absolutely the right business model for India. That's going to connect the dots between the long tail of supply to the long tail of demand and provide this life-changing experience that is much needed for the SMEs of India.
So Kunal, fundraising, you haven't answered my question.
Is it a company question or is it an industry question?
Well, both. You can choose to answer the industry part of it. That's easier to start with.
I think absolutely. Companies that are compliant with the guidelines and clarifications as per the government as of today will obviously have to answer fewer questions and hopefully have to hire lesser number of lawyers to address some of the uncomfortable questions from investors around the regulatory ambiguities that existed. So I think all that is very, very positive.
Who's going to be facing the uncomfortable questions, Kunal?
I think the entrepreneurs have to continue to face the uncomfortable questions around all the obvious ones, which is profitability and experience and all that. But that's the normal course of building any new industry. Telecom had to go through it 15, 20 years ago. We are going through it right now. And our industry will come out of it much stronger.
Well, we hope that that is indeed the case, and we hope that this does now provide much needed clarity as far as the FDI regulations for the e-commerce sector is concerned. But as Vaibhav was pointing out, this matter is also sub judice. It's in court as well, so let's see how it finally pans out. Sharad Sharma, Vaibhav, Kakkar, Kunal, Bahl, appreciate you joining us here on CNBC TV 18 and decoding the guidelines issued by the DIPP via Press Note 3 on FDI regulating the e-commerce sector. But let's